Yo, so it's a little bit later than normal because I was out surfing pretty much all day. So right after I placed my trade today, I dipped, did not make the chart review right after. So I apologize for getting this thing out here a little late. But we did take one trade today, again, sticking to the plan, one trade per day, and being done after that. So I'll go over the trade and what happened, the mistake I made on it, and what I could do better for the next time and what I learned from it, and kind of overall what the market did today. And then I'll pull up the trade execution, the live execution, the video, like I always do at the end, to show exactly what I was talking about. So yesterday, obviously, or the last little bit, we've been just selling and selling and selling, right? And on the higher time frame, we put in a SMT at these lows here when it loads. We put in a bullish SMT. So this low did not take this low, so I'll show you on ES. Let's see. So this is the 2 o'clock low. 1, 2, and then 8, and then 8. So as you can see here, we swept this low here. We came down underneath it, and NQ didn't, so that's a bullish SMT. We end up creating a 1 hour imbalance here that has not been filled yet, which is what I was looking at going into the day to kind of create a bias, and like see price trade into it. And we also had this break of structure on these highs, and on this high we had a break of structure to the upside. So again, another sign of a potential reversal in the marketplace, which is kind of what I was looking for. So going into the day, I was a little bit bullish, but I also was patient to see kind of what was happening, right? So as you can see here, this is where market kind of opened up today. We swept under this low. So going to the day, this is what I was looking at here. I was looking at this low getting taken and seeing what would happen. I wanted to see this low be where we'd manipulate the low. I wanted to see price come down off open, come down below this low, and maybe do something like this. Come down, sweep this low, build structure, manipulate the low one more time, maybe an SMT, and then get the expansion move higher, right? So I wanted to see that because we had this liquidity down here from yesterday, and we had a 1 hour imbalance that I wanted to see get traded into as a high confluence area to then go higher, right? This would have been also equilibrium, I believe, of this move right here. From this high to this low, we would have been in equilibrium right at this level. So that would have been a nice area to reject price. So that was kind of what I was looking at going into the day. I wasn't able to be here right off open. I had a dentist appointment, so I didn't see this live time that a lot of you guys, if you started trading inverse fair value gaps, you might have taken, right? We traded above. We actually had a 15-minute fair value gap right here. Wow, I hate when TradingView does this, right? Okay, so we had a 15-minute fair value gap. This is the start of the day. We had a 15-minute bearish gap here that, as you can see, off open, which was 9:30, which was right here on this candle. As you see on open, we come in to the gap. We don't really sweep into liquidity, and we inverse right here. So I'll get rid of the 15-minute. We obviously held the 15-minute, but we inversed right here. We had a strong move down, and we had this low-hanging fruit, and we also had this target as well. So if you did catch this, it's not a horrible trade, but there's a few reasons why it wasn't my favorite setup ever. This would have been a 90-something point trade, which is very nice. But the reason I am not the biggest fan of this trade is because it's right off open, and there's no real clear bias. We didn't sweep any sell side or buy side liquidity. We didn't sweep any liquidity on like any major liquidity. We're not delivering from a higher time frame fair value gap besides the 15-minute, but again, it's not very obvious, right? I like to use fair value gaps that have swing highs and swing lows, right? So if we're looking at this 1 hour imbalance here, this 1 hour imbalance makes sense because we have all these stacked lows that we would be sweeping. If we came down and swept this low over here, we would come down into a bigger time frame imbalance to then push price higher, right? That makes a lot more sense to see price have this type of signature when it's sweeping out in a fair value gap in a specific low, and also this unmitigated fair value gap right here on the 1 minute. So it would make more sense for price to do that and also take out these lows. And that's what I mean when I say there's no higher time frame fair value gap. Even though we had a 15-minute, it's still not very valid because if you notice here, there's no real swing high that creates it, and it's just kind of in random price action and built through this leg, right? So this trade ended up working really nice. It would have been a good take profit, and that could have been a great trade. I wasn't here at the time. I don't think I would have taken it because of what I said. But anyways, after this happened, we had the liquidity get purged on off open, and this kind of became the Judas swing in the morning. We just kind of, I could be using that incorrectly, but we had the manipulation here and just run below sell side to fake out people and then set up the real move. So I want to talk about this area right here because there's a lot of confluences that I can look at after price that can give us a lot of confluence to go bullish, right? So that's kind of how today I want to look through the rest of price action and kind of go over why things happened through different concepts, right? So first off, we did sweep sell side. So this is a prominent low in the market. We come down and we swept below it and had a reaction. So this is we swept liquidity, right? That's step one. Did we have an SMT? I do not believe so. 515. Yeah, we did not have an SMT. So that would have been also another confluence, obviously. And let's put in this and on ES. Let's see. That's not good. There we go. So liquidity here. So we did not have an SMT, but what do we have? On the 30-minute, we have a lot of confluences here, again, that I'm willing to go over, or wanting to go over. One thing I would like to go over is on the 30-minute, what's it, the 30-minute? This is technically a breaker block over here, and I'll go over why I'd say that, but we're holding it very nicely. A breaker block. I don't have a preset. Dang, I thought I had the preset saved. Breaker block, and it's orange, and it's in the right. There we go, breaker block and style. Let's make it orange. Orange. Breaker block, that's fine. Template, save as. Sorry about that. Breaker block. I had it saved on my Top Step X account. Dang. So this is a breaker block, and the reason being, or at least why I consider one, is we have a swing low, a swing high, a lower low, and a higher high when we came down. So we didn't really purge liquidity, so it's not as valid. So I guess not really valid. But this is like a failed order block, right? So maybe it's not a breaker block by definition, but we do also hold price really well here because, again, failed order blocks are decent, kind of like support and resistance. Again, this isn't something that you need to be worried about trading off of, but it's kind of there, and it's interesting today that we rejected off of it, right? What else do we have, though, that we can be more concrete about? We have a 30-minute bullish fair value gap that we hold very well. 30-minute bullish. Oh, my gosh. 30-minute bullish. We hold the 30-minute fair value gap. Notice the wicks come in and trade through, but the candles close. This is a very strong reaction after taking liquidity. So this showed me that we weren't really going to come back down to this 1 hour, and I was ready to look for longs because of this reaction and this close on the lower time frame. So because of this, right, we see us purge liquidity. We also, something that I really like to see, and this is underlooked a lot, is that we ran the low. We ran the low again, right? We put in a low here. I don't like when we just reverse. I like when we sweep the low one last time and have a bullish reaction. So we get displacement to the upside. We hold the first imbalance and the second imbalance. We actually hit equilibrium to the tick right here. We actually, to the tick, hit equilibrium of this expansion up, right? And then we hold the first fair value gap and we run, make another fair value gap. And then at this point, this is when I was starting to really make the case for longs. We put in equal lows here. We put in equal lows, and I really, really liked this bearish fair value gap or bullish fair value gap as a target to come back down to at some point and visit and bounce out of this 1 minute bullish fair value gap because we had equal lows to then go higher. My first main target was this 730 swing high right here. And then my target for the day was Asia highs over here. So my main target was Asia highs, and we'll go over a lot. I have a lot to talk about in that, obviously. So Asia high was my main target. This could have been my target as well, the London high. So I'll actually mark that out because this is a pretty important spot for what happened today. But this was a fine high. So for the trade I took. So anyways, I started seeing this and I started to really want to see this area get traded into to then go higher. I didn't want to see this high get taken out first, so I really like the structure. Then we put in equal highs right here. We put in equal highs. So it made the confluence to go long even better. And then we had obviously this liquidity pool. So when we started trading down here, I actually did like this inverse, not the take, but just because we had a SMT at the time. We had a bearish SMT. So I actually like this inverse to try and come down to these equal lows. And we also had a SMT here, which again is part of the reason why I want to go over some of the things I made a mistake on the trade. So we come down, I was looking for these lows, we don't get it, and I'm watching this fair value gap because I knew that if this fair value gap broke, it was probably going to be a great trade, especially if we didn't take the equal highs. So I wanted to see here, it didn't happen, we react, and we get in right on this candle close. We got in pretty much right on the candle close, and our stop was right here, and we were risking every penny of the $500 or $400. It was actually closer to 500 just because, and yeah, so we'll go over that. That was the extendo take profit, but this is where we made our first mistake, right? Our first mistake was taking profit at an invalid area and going to break even at an invalid area, right? So we get in the trade here, and what do I like to do? I like to only take profit at a 1-to-1, and since I only like to take profit at a 1-to-1, the fact that I took profit at this high here kind of kills my RR, and it also hurts me in the long run, right? So this candle came in, and I'll go over in the live execution. I'll pull it up in a second and kind of really go over what I'm talking about. But we get in here, and we scale this high, and we go to break even, and as you can see, we get wicked out break even here. But that was a mistake. I should have taken my first profit at this high, but, you know, so that is a genuine mistake. And then I could have taken profit at this high, and I want to pull up the ES at the time because ES actually, we actually had a lot of things going on. So right here, we had a SMT with NQ and ES. We didn't run this high yet. As you notice, this is my entry on NQ, and look, we're higher here, right? Because the draw of liquidity is Asia high, I should not have been worried about this SMT, and I should not have been worried about scaling at this internal high because the draw on liquidity was higher, right? But notice what time we run this high on ES. We run the high at 10:47. So this is the objective for the day, and this is something that the main point of the video is that when the target for the day is getting hit, right? The bigger time frame model on the 30-minute is Asia high, right? I was looking to take a trade to Asia high today, right? We held this bullish fair value gap, we swept liquidity, and we break structure to the upside. I'm looking for trades to trade to this high, right? Regardless of how high I think the price is going to go, this is where I'm looking for market withdrawal to. This is the draw on liquidity for the day. So because the higher time frame bias was so bullish, I needed to trust my model more and be more confident in the actual higher time frame playing out. So again, when we run this high here on ES at 1047, that's when I could have scaled everything but maybe one runner on the trade, because at 1047, 1047 is right here, we also hit London high. So Asia high gets taken out, so that we then create an SMT with ES. At the time, we run, and we'll just put it here for the sake of visibility. We run this high at the same time creating a big SMT, and the objective for ES was taken. So if the objective for ES is taken, there would be no reason to hold in Q still and just not take profits, right? I could take profits very healthily at this high, which was 100-something points. So that was more than enough. And then the model's playing out, right? And then I could leave a runner and maybe trail my stop to here, and it gets stopped at break even, right? So, gosh, there's a lot to talk about today. Today was a great, I think, a great day. So we had those SMTs all over the place, and that's how I could have managed the trade better, and how I should have managed the trade better. I should have taken profit at this high first. This should be my first take profit, and then go break even there. Let the trade play out. Maybe take some profits at this London high, and then also when I see ES take out this high, which is the objective that I'm actually trading, the bigger time frame model I'm trading. Once that gets taken out, be aggressive and take most of my profits off, maybe leave a runner, and have a great day. So we should have had a really, really good day today, but we did not. We had an average day and get stopped in profit, right? One reason I want to say about not coming down to these equal lows before going higher, which was frustrating, but because we just made it very clean. One thing I have to say is when you drop to the 5 minute, one interesting thing about today's price action was the fact that, okay, we're in the wrong spot, my bad, was that we didn't actually need to really rebalance lower, because we actually had a very sneaky 5 minute gap right here that we wick into. So we actually did rebalance to a fair value gap. And yeah, so we actually did rebalance anyways, price. So that's pretty cool. As you can remember, the blue one's the 5 minute. So we actually do come down into the 5 minute and reject and have a good reaction. So that's why we didn't really need to come back down. Also, we did get into this 5 minute or 15 minute inverse fair value gap. So that was also another confluence for why we didn't really need to trade lower. Why is it doing this? Okay, there we go. So we actually had this inverse, right? The inverse fair value gap when we broke above. What do? We come down and we trade into the inverse and move higher. So overall, very clean. The last thing I want to show on the charts before I pull up my execution is standard deviation, manipulation leg, the stuff that Justin preaches. It showed up really stinking cool today. I don't use it too often, but I was looking at it live time. And let me actually fix this thing real quick. So from this swing low to this swing high, or this swing low, right? It's the standard deviation projection, right? And it's the -2 to 2.5 range. You draw it on the manipulation leg. So this is the manipulation leg because this is the sell side liquidity that we purge. So we have a run on liquidity from here to here. So we run liquidity. That's the manipulation because we're running below it and then get a reversal. Because we got the reversal, that shows that this is actually the manipulation leg. So from the swing high to the swing low, you draw your standard deviation. And look at how -1 almost lines up with sell side here. And -2 to 2.5 lines up exactly with the higher time frame bias, right? We have a perfect level, the 2 to 2.5, where we actually reject. And where do you expect price to go after the 2 to 2.5? You expect to come back to equilibrium, which we do, and some. But I really thought this was very interesting today that this projection tool actually worked, the blue box being the 2 to 2.5 range. And that just shows everything overlapping, right? This chart might look hectic with the equal highs, the money signs, SMT, the standard deviation, the blue box, the lines, the targets, the fair value gaps, the liquidity. It might look confusing, but when it all connects, it really just all connects beautifully. And today was really one of the cooler days that I've seen in price for a long time, because I really had a very good read on the market today, I feel like, which I was very happy about. I was really happy to come in and have a good understanding of where price was going today and really read the charts like a book again today, because I feel like I've been a little bit out of it in some of the days more recently. So that's just really cool. That's kind of like a side piece, a little hidden gem, because we do end up hitting the projection, which is so cool. And it's cool when the projection lines up perfectly with a really cool draw on liquidity, right? This was a perfect storm of things today. After I ended up trading, there really wasn't anything too crazy. We had this fair value gap that we were delivering off of the inverse, and we inversed this 2 minute. This is solid right here. This could be in a solid play. Go long off the break, which would have been on this candle. You would have to have a 40-ish point stop, but you could have targeted higher, and you would have been able to get about 90 points and left your runners for the 180. So again, a very, very clean day. And now, as promised, I'll pull up the execution. So here we go. Or the execution. There's only one. But yeah, so I was just ended up surfing all day after trading. And here we go. Yeah, so this is the trade. We got in where we said we got in. We're on the micros. There's not equal highs on the micros. I was just making sure that on the full contract it was actually closing above. It did. So I went in and I bought market 6 micros. And as you can see, this take profit, I don't know if you can read it, it says 576. If I just held to here without going to break even, I would have made $576. I put my limit order to scale half at this internal high, which again is not even a 1-to-1, which is what I talk about, where I really want to start focusing on only taking trades or taking partials only when it's a 1-to-1. So today I kind of broke my rules by moving my stop to break even too soon and not holding to 1-to-1. And just being too aggressive to take profit. But I think I was just a little antsy, especially with this right candle, because this candle kind of shook me up a little bit. I was negative, but it wasn't anything crazy. And obviously, I just held through the trade and just let it play out. One thing I do want to say that I forgot to point out when I was looking at the chart and charting through it, is that this candle here actually became a very nice order block that we end up holding price through pretty well. So this thing became a nice order block. Obviously, we don't know live time, but after the fact, it was a nice order block that we ended up rejecting. So this candle was giving me some confidence, but I wanted to see a good, strong close. And right here, we kind of wick above, so live time, and we're closing. I was a little bit worried, but I wasn't too worried. Obviously, I didn't cancel the trade. And then where do we get the close? We get the close here. This close was very good. And then we hit our first take profit, so I moved my stop to break even. We locked up $140 something. So I was like, okay, cool, and I wanted to just see it continue, accelerate through. Of course it didn't, but that's all right. You can see I wanted to sell off 2 and leave an external runner, and this was just too aggressive of taking profits. It really just was. I really think I could have done a lot better. Again, scaling at this high isn't a 1-to-1, and it's a little bit too aggressive. It's a little bit too afraid of letting the trade just play out and just being confident in my bias, being confident in the draw and liquidity, being confident in what I want to see actually happen. Because when you zoom out on the bigger time frame, we've just aligned everything perfectly. The liquidity sweep down here, the break of structure back to the upside, the standard deviation projection, a 5-minute fair value gap getting respected, good structure, and then we get our entry model. And I have to just trust out in the bigger time frame draw and the bigger time frame bias and really be able to capitalize, right? So we made this 1-minute fair value gap. I didn't even want to see it really get tapped. And if anything, maybe just wick it and then go on higher. I want it to be quick and effective. But this fair value gap ends up wicking really well. You'll see me get stopped out on my runners. But this order block right here can't make my mouse bigger. This order block down here held very good, and it just wicked down to around here and then closed very strong. So it closed like right above this fair value gap. So this was a very good reaction, even though I got stopped out. If I didn't take profit here, this would have been a very nice reaction. As you can see, this is when my video ends, but it wicked up to here, and that's such a good close. So again, I really need to start practicing. When I take a trade, I'm trying to align all the time frame and the draw and liquidity to the actual bias, and just really be confident in what I did and the decision I made to take the trade, and just let it play out, and just let it play out well, and really capitalize on these moves, because I think that'll be the difference in what's holding me back in the long run, is just not letting these trades play out to their full potential, right? So that was the trade execution, and I feel like there's a lot of value in today's charting session, for me at least, to look back and learn from. I don't want to make this video any longer, to be honest, because it's already late. So I appreciate everyone watching these videos. I hope you guys had a good day. Hope you guys have a great day tomorrow. And I appreciate everyone, again, that tunes into these videos and watched it all the way through. So I'll see you guys tomorrow. Peace.